Warning, something big is happening, and almost nobody's talking about it. Gold prices are exploding. Investors are rushing to buy. And the last time this happened, the world was on the edge of a financial meltdown. Every time gold skyrockets, it tells the same old story. One that's written in fear, not fortune. Because gold doesn't rise when the world is confident. It rises when people start losing faith in the system, when currencies weaken, when governments print money like there's no tomorrow, when people don't trust their banks, they run to gold. And here's the scary truth. Every spike in gold has historically been followed by economic chaos. So, if you've been celebrating gold's rise, thinking it's a sign of strength, you might be celebrating the calm before the storm. In today's video, we're breaking down exactly why gold prices are signaling a major crash, what history is warning us about, and how you can stay one step ahead before the dominoes fall. But before we jump in, if you want more eye-opening videos that reveal the hidden patterns behind global events, go ahead and subscribe right now, because what you'll hear today could change how you think about money forever. And tell me in the comments, do you think gold's rise means the economy is strong, or that it's falling apart? I'm genuinely curious. I'll be reading and replying to your thoughts below. Alright, let's begin. Let's be honest, gold is not glamorous. It's not the next hot stock, not the next crypto, not the next tech breakthrough. It just sits there, heavy, still, quiet. But here's the secret. When things go wrong, the quiet ones speak the loudest. Gold's rise isn't driven by greed, it's driven by fear. When investors get scared of inflation, war, or financial instability, they don't buy Teslas or NFTs, they buy gold. Because gold doesn't depend on CEOs, algorithms, or government policies. It's the one thing that has stood the test of every empire and every crisis. Let's go back for a moment. In 2008, the world was on its knees. Banks failed, homes were lost, and entire economies froze overnight. Gold prices soared to record highs, not because the world was doing well, but because it was breaking. Then in 2020, when a global pandemic shut everything down, markets crashed, fear skyrocketed, and again, gold hit new all-time highs. Now here we are again. Gold is climbing fast, but not because everything's fine, because people don't trust that it is. Let's zoom out for a second. On the surface, everything looks okay. Markets are steady, unemployment is low, governments say inflation is under control. But beneath the surface, there are cracks, deep ones. First, debt. The US national debt has passed $35 trillion. That's $35 trillion. Money that doesn't exist, but somehow must be repaid. Every second, the government borrows more. And to keep the illusion alive, it keeps printing money. But printing money doesn't create wealth. It only dilutes it. The more dollars there are in circulation, the less each dollar is worth. It's like adding water to juice. It looks like more, but it tastes like less. And that's exactly what's happening to your savings. Your paycheck might say the same number, but what it buys? Less. Every month. That's why people are losing trust in paper currency. And when trust disappears, people move their faith to gold. Because gold can't be printed, hacked, or erased by a policy decision. It just exists. Real, physical, eternal. Then there's inflation. Governments say, it's only 3%, but go buy groceries, pay rent, fill your car with gas. You'll feel the truth. The cost of living keeps rising while wages struggle to catch up. And here's the thing, even if prices stabilise, they rarely go back down. That's why inflation isn't a number. It's a lifestyle tax. And when people realise their money buys less every year, they start looking for something that holds value, gold, again. Now let's talk about why the recent gold surge feels different. Every major spike in gold's history has been followed by a crisis. Here's the pattern. 1979. Gold rose 120% in a year. What followed? Inflation, unemployment, and a brutal recession. 2008. Gold jumped right before the housing bubble burst. Banks collapsed. Markets plunged. 2020. Gold hit a new record high during global lockdowns. Economies froze. See the pattern? When gold screams upward, it's not celebrating prosperity, it's warning of instability. And it's not just retail investors buying gold. The world's central banks, the real financial powerhouses, are hoarding gold at the fastest pace in over 50 years. In 2024, central banks bought over 1,000 tons of gold, the largest annual purchase since records began. Why would they do that? Unless they're preparing for a currency shakeup. Countries like China, Russia, and Turkey have been quietly building massive gold reserves, reducing their reliance on the US dollar. Because when the dollar loses dominance, gold becomes the new anchor of trust. So when you see gold rising now, it's not just an investment trend. It's a geopolitical signal that the financial world is shifting. For decades, the global system has run on one fragile thing: trust. We trust that banks are safe. We trust that governments can pay their debts. We trust that printed money has real value. But what happens when that trust starts to crack? People rush toward tangibles, things they can touch, hold, or store. That's why assets like gold, silver, real estate, and even Bitcoin rise during uncertainty. They all represent one thing: control. People are tired of systems that can change overnight, of policies, interest rates, and digital digits that decide their financial fate. They want something that doesn't depend on anyone's promise. That's what gold represents: financial independence in an age of financial fragility. Now, that doesn't mean you should sell everything and buy gold bars. No, that's not the point. The point is, gold's rise isn't random. It's a reflection of what people, especially powerful people, are feeling. And right now they're feeling uncertain. Let's imagine this. You're at a dinner party, everything's fine. Then someone whispers, "I think the kitchen's on fire." Nobody panics yet. One person stands up, then another. Suddenly everyone rushes to the exit. That's how financial panic works. In 2008, it started small, bad mortgage loans, but fear spread faster than facts. Soon, credit markets froze, then banks collapsed, then the entire global economy went down. Gold doesn't cause panic, it simply reflects it. It's the canary in the coal mine, the first to sense danger, the first to react. So when gold prices start spiking while everything looks fine, that's your cue to pay attention. Because markets move slowly, but panic moves instantly. Let's take a quick history tour. In 1929, the world partied on borrowed money. Everyone thought the good times will never end. Then came the Great Depression. Gold became the ultimate store of value. In the 1970s, runaway inflation and oil crises crushed the economy. Gold went from $35 an ounce to over $800. In 2008, the financial system almost collapsed. Gold doubled again. In 2020, when the world shut down, gold soared to record highs. Now in 2025, gold is breaking those records again, and history's whispering the same warning. When gold roars, danger follows. Okay, let's make this practical. What should you do right now? 1. Stay informed. Don't just follow hype. Understand why markets move. The more you know, the less you panic. 2. Diversify your wealth. Don't put everything in one place. Mix it up. Savings, stocks, hard assets, maybe some gold, because the best protection isn't prediction, it's preparation. 3. Watch the central banks. Their actions shape everything. If they're buying gold, raising rates, or changing policy, take note. They know what's coming before the headlines do. 4. Think long term. Gold's message isn't about making quick profits. It's about surviving financial storms and coming out stronger. So instead of chasing trends, build a mindset that sees the bigger picture, one that values safety over speed. Gold doesn't have emotions. It doesn't celebrate. It doesn't panic. It simply reflects what's happening in the hearts of people. So when gold moves, it's not gold that's changing. It's our confidence in the system that's changing. That's why this spike matters. It's not about metal, it's about trust. And how fast we're losing it. Because every empire, every system, every economy eventually faces the same question. What happens when people stop believing? Gold is the answer to that question. Every time. So, what do you think? Is gold predicting another crash or just another cycle? Drop your thoughts in the comments. I'd love to read your take. And if you found this video valuable, if it made you think differently about what's really going on, then please hit that like button, subscribe and turn on notifications so you never miss a video that helps you stay ahead of the curve. Remember, gold doesn't rise for no reason. It rises to warn. And the question is, are you listening?